typically when I see that set up, I will actually go to Luna and just take shorts based on my criteria. So in this example, you can see Luna was actually just kind of flirting with the 200 and the 800, kind of just resting along both of them. And right after 1800 at about 1900, we actually got a close below the 800 there. So what I did was I just took my short there. I placed my stop as a close, above the candle that I shorted on, the close below. So my stop was here at about 252. My entry was at about 250. And within 15 minutes on 20X, you're up 174%. Now, like I said, this plays out a lot with Luna when E shorts. Now, typically as well, what you get with Luna, which I don't understand why because of all the negativity with Luna, but hey, as long as it keeps paying, I'm going to keep trading it. But the same situation that we talked about before, if you get those drastic candles that push down and the TDIs breach to 30, and especially giving you the shark fin, look for those first FVGs going to the opposite direction. If you simply took a trade based on that here, you're in at 232, price freaking mooned all the way to 312. So if you're using the same leverage 20X that I use, which I don't recommend to you beginners, but for your experienced guys with your tight stop losses, you can manage it. From here to here, I mean, you're talking 300-400% gains on 20X leverage. So like I said, if you're a day trader, you're just looking for something that's solid and moves pretty consistently, go to KuCoin, go to Gains, go to whatever you use, trade Luna. That's all I can say. And, same thing here. You got an aggressive candle here to the upside. You got the divergence with the TDI here above the 70, actually at the 80. You got your first massive FVG to the red side popping up. You got a retest here on this candle. That was your entry. So your entry would have been right here on this candle, anywhere in that red box. And as you can see, it's just been shorting ever since. So, easy money to be made on Luna using the strategy that I'm just talking about. Now, if you're even more aggressive of a day trader, you can do the same exact thing, but just drop to the 2-minute time frame. Okay. So same exact thing, guys. It's very clear here. Shark fin above the 70, first FVG. You got your retest here on this candle. I would have had my pending order set. So you could have got in at, 286, slight drawdown to 288, and then boom, you're all the way down to 276. Leverage trade, that's easily 20, 30, 40, 50% on Luna. So, just using these basic things, TDI at 30, first green FVG, it pays out a lot of times, guys, if you just trade it consistently. Don't try to mix strategies with it. Don't try to add a twist and turn. Just take the strategy as it comes with the 70 and 30s and with the FVG retest, and you're gonna make some money, guys, if you're just patient and wait for the setups. Like I said, most people, they just see all these FVGs and they're trying to trade every single one. But if you wait for the key ones, those are going to pay you out the most. Let's see. Share the full name. Yeah, I went over it earlier, but it's TDI. And it's this one here by Gold Mines. Edited for MMM by Jacob Donovan. 7,800 views or downloads. All right. Cool. So before I move on from the charts, any quick questions on FEG, how to determine the areas to look for the high probable trades? Any quick questions? Throw them out to me.
I have one right quick, Darrell. This is Vanessa. You
Hey,
say when the TDI gets above 30, look
so
for
if it,
a positive uptrend?
Yeah, so anywhere close to 30, I like to give it a grace of about 33 to 34. So if it's at the 30 to 34, that's where you're looking for your buy setups. If it's at the 70 or really the 67 to 70 plus, that's where you're looking for your sell setups. Okay.
Okay.
If you have the shark fin as well, that's an extra bonus. Those are the high probable ones where you got that literally looks like a shark fin.
Okay, thank you.
Here. Yeah, no problem. Same thing here. This didn't quite reach the 70. It got to 66, but it gave you that nice shark fin. You can't see it now, but there's an FVG right here. Price retested it. Boom. drop down. Simple.
Okay,
And the
gotcha.
and Darrell, the shark fin definitely needs to be above the upper band or below the lower band to
Yes,
see
yes,
that
shark.
fin.
Yes, only look for shark fins outside of the bands. We're not really looking for a shark fin
Anywhere
inside the
else.
band, kind of how you see here. We don't really care about those. We want to see those clear out of the bands. So the reason we call it a shark fin is since the Bollinger Bands are blue, it's almost like it's water or the ocean or something.
Right.
So to see a shark fin, it has to come out of what? The ocean. So that's the setups we're looking for. And then, like I said, the closer it is to the 70 or 30, the more high probable. And even if it doesn't play out and you kind of get a divergence, the reason I like it is, if you're taking entries at the first FEG or within that zone, like for example, here, if you're taking a trade here in this FEG, your stop is right here. So if you are wrong, you're not losing that much. Versus when you're right and you're taking at the correct entries, you're gaining far more. Okay. So like even for this example here, let's just say you took it dead center in the middle of the FEG, your stop is about, whoops. Let's see, your stop is about 1% as far as the raw price on Luna versus the risk to reward. The downside, even if we don't go all the way to the bottom, let's just go partial, is about 3%. So that's about a 3-to-1 ratio you're making on the successful trade. So I'm willing to lose this 1% if it does go against me and just wait for the exact same setup to happen again, because I know if I keep doing this strategy, most of the times I'm minimum going to get a 2-to-1, but a lot of times I'm telling you, you'll get a 3-to-1, 4-to-1, just depending on what asset you're trading. Especially like your NASDAQ, stuff like that moves a lot more volatile. You'll get a far better return than 2-1. Right? Does that make sense? Do you use this strategy as well for Forex and stocks? Yes. Doesn't really matter what you're trading. What matters is the actual setup. Use the rules, use the strategy, and trade the setup. Doesn't matter what it is.
Hey, Darrell, can you hear me?
Yeah, what's good?
Hey, what's going on? It's Z.
What's up, man?
I have a question. How do you feel about these trades with regards to the CPI? I don't know if you mentioned it already.
Say that again.
How do you feel about these trades? How would you feel about these trades with regards to the CPI news at the moment?
You said in regards with the TDI?
The CPI news.
CPI news. Yeah. So I mean,
Right.
news, I don't like to get caught up in the news. I like to let the news play out and then I trade the after effect. Because what typically happens is when you get the news, you're going to get some big move up. And typically those big moves up is what can cause the TDI to go in your favor for these setups. And I just trade the after effect. But as far as trying to guess which way the news is going to go, I feel like that's a guessing game because there's really no clear pattern. I mean, they just use news to move the market in a direction they're going to move it anyway, because you could have the most positive news and the market just tanks, or you have the worst news possible. Like I've seen a lot of times where they're raising interest rates and they're like, oh, the economy sucks. And then NASDAQ just freaking rips. So I like to trade the after effect.